Bitcoin doesn't do anything. Right? All it is a speculative vehicle that I can trade. I can hold it and I can sell it. But my ability to sell it rests on the fact that somebody else wants it. And why would somebody else want it? Because they think they can sell it. And they think they can sell it at a higher price. If they think they can sell it at a lower price, they're not going to want it. So the demand for Bitcoin is a function of the fact that everybody expects the future price to be higher. But the minute you no longer have that expectation for an appreciating price, there's no buyers. Because there's nothing you can do with it between the time you buy it and the time you sell it. And so it just goes down. There's no reason to own it.
If we saw that people were using it less, there was less activity, less value was being transacted, less new people were joining, the Bitcoin network, i.e. having wallets, then I would say, you know what, there's something wrong here. And is that persistent over time? If it's persistent over time, then the network may not work. And we've seen many of those things happen in the past. There's a possibility that happens. I don't think it's the highest probability, certainly not this decade. Could it happen after that? Of course possible.
If I'm speculatively investing, I'm looking for volatility with a risk-adjusted return that I think is in my favor. Obviously, we get bets wrong, we get bets right. That's the idea. So you look for a strong trending asset with some hypothesis that is relatively provable over time that should continue to drive the asset, whether it's the Indian stock market, a technology company, or Bitcoin, or even gold.
Raoul Pal begins by addressing a crucial aspect of Bitcoin's value, its network effect. He argues that the utility and value of Bitcoin, much like any network-dependent asset, are directly tied to the number of active users and the amount of value being transacted on its network. This principle applies not just to Bitcoin, but also to traditional assets like gold, which has seen a decline in its appeal as fewer people in the modern digital era view it as a primary store of value. Pal emphasizes that if Bitcoin were to experience a significant and sustained drop in user engagement or transactional activity, it could signal a weakening of its value proposition. However, he notes that this scenario is not likely to play out in the near term. Reflecting on past bear markets, such as the one in 2022, he points out that despite the price of Bitcoin plummeting by over 70%, the number of active wallets continued to grow, indicating ongoing adoption even in adverse market conditions. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If people stop using the network, if there's less activity on the network, people start becoming disinterested, then it's shown that its store of value principles erode. It would be the same with gold. And that's one of the reasons gold has been somewhat lackluster, because there's been less adopters of gold in a new digital world. So it's not done as well as it would have done historically in the kind of debasement environment that we've had. So if I were to observe in Bitcoin itself, forget all the other crypto, and I'm no Bitcoin maximalist as you all know, if we saw that people were using it less, there was less activity, less value was being transacted, less new people were joining, the Bitcoin network, i.e. having wallets, then I would say, you know what, there's something wrong here. And is that persistent over time? If it's persistent over time, then the network may not work. And we've seen many of those things happen in the past. There's a possibility that happens. I don't think it's the highest probability, certainly not this decade. Could it happen after that? Of course possible.
Now, why don't you worry about that during the bear markets?
Because, so for example, in 2022 was a great example, is the market went down 75%. The number of active wallets in crypto went up 42%, 42%. So the adoption was still ongoing while price went down. Activity was less. But then we're seeing, okay, so if we step back and we hear, oh, governments are going to build on blockchain rails, CBDCs. All the banks want to put assets on blockchain rails. We're hearing gaming companies want to put these metaverse gaming experiences on blockchain rails. We're hearing, I was at one of the world's largest commodity trading firms in Switzerland last week, speaking to one of their senior agricultural commodities physical traders. And I'm like, and she's an investor in my digital asset management company. And I'm like, are you guys using blockchain? Surely you should be solving supply chain. She goes, oh, we've been using blockchain since 2021. So we're doing 8, I think, of the world's largest agricultural commodities houses are putting their letters of credit, their shipping, their all of the kind of transit proofs, the supply chain, and the settlement all on blockchain. So going back to your question, Tom, when I see this and I see the price of Bitcoin down 75% or the whole crypto space down 80%, you say, I have to ask myself, is adoption stopping? Or is just this a cyclical factor that's driven by the business cycle? And until I would see otherwise, unless these things go away, then I can only assume that tomorrow is more digital than today. And tomorrow, more people will use blockchain technology than they did yesterday.
Bitcoin doesn't do anything. Right? All it is a speculative vehicle that I can trade. I can hold it and I can sell it. But my ability to sell it rests on the fact that somebody else wants it. And why would somebody else want it? Because they think they can sell it. And they think they can sell it at a higher price. If they think they can sell it at a lower price, they're not going to want it. So the demand for Bitcoin is a function of the fact that everybody expects the future price to be higher. But the minute you no longer have that expectation for an appreciating price, there's no buyers. Because there's nothing you can do with it between the time you buy it and the time you sell it. And so it just goes down. There's no reason to own it. Buying Bitcoin is not safe. It's highly speculative. You're speculating on a bunch of things that you think might happen, but you're not playing it safe. Nobody should operate under the delusion that I'm buying Bitcoin because I want to play it safe. You should not put any money into Bitcoin that you're not 100% willing to lose, all of it. So if you're saying, yeah, this is risk money, I can lose every penny that I put into Bitcoin, and I'm okay with that. I mean, I hope I don't lose all my money. I hope it goes to the moon and I buy a Lambo. But if I lose it all, I'm okay because I got other resources that I can fall back on. That's how you have to look at it. You can't think that, I'm going to put my money all my money in here because it's real safe.
If I'm speculatively investing, I'm looking for volatility with a risk-adjusted return that I think is in my favor. Obviously, we get bets wrong, we get bets right. That's the idea. So you look for a strong trending asset with some hypothesis that is relatively provable over time that should continue to drive the asset, whether it's the Indian stock market, a technology company, or Bitcoin, or even gold.
Michael Saylor also explores the concept of Bitcoin as digital capital. He explains that Bitcoin has the potential to transform traditional capital markets by extending the duration over which capital can be held and increasing the speed at which it can be transferred. This, in turn, could lead to more efficient and dynamic economic systems. However, he acknowledges that this transformation is still in its early stages and that there are many unresolved issues, particularly around how society deals with digital entitlements, global disagreements on information dissemination, and the role of governments in regulating digital spaces.
What Bitcoin does is it's digital capital. So it reforms the capital markets, and it makes it possible to, instead of holding capital for 30 years, you could hold capital for 3,000 years. Okay, so it stretches out the duration of your capital instead of being able to oscillate the capital, at 10 vibrations per year. you could oscillate the capital at 100 megahertz, right? It's something much faster, right? We've got high frequency oscillation and we've got long duration economic longevity. But we haven't solved the issue of, how should we deal with entitlements? How should we deal with a disagreement over global warming? We disagree over foreign policy. We disagree. We have, you have these great digital companies, Apple, Google, Facebook, Amazon, and now you can basically plug into 1 billion people. And now there's a disagreement about whether or not the politicians should be able to tell the companies what they can say or do. Right? It's like, now it's possible for us to give free information to 8 billion people, but now one government would say, well, we don't want you to give that information. Well, another government will say, we want you to give that information. What happens when two governments disagree about what the 8 billion people should know? You've got a foreign policy issue, you've got a military issue, right? That China blocks Google, YouTube, and it blocks X and Twitter in China and Facebook.
They fear free information. That's what they do. That's the reason why they burn books or do things like this. They fear information.
Well, so there's there's just a disagreement, right? And so there's disagreements. What is censorship? What is misinformation? If I create an AI fake of you, or an AI fake of me that says Bitcoin is bad, I hate it, I'm selling all my Bitcoin, and it gets released and it goes viral. Okay, is that free speech? Or is that a scam? And there's a disagreement about how to deal with it. So I have laser eyes, and you'll see them on X, and I keep them. And the significance of laser eyes is
You can hear them.
Yeah.
You are focused, right?
I'm focused. I think that there's one good thing. I believe in clean money. I believe in digital capital. I believe that there's $450 trillion of wealth tied up in physical and financial capital assets that are defective. I believe, and I said this in Nashville a few weeks ago. I said that 450 trillion is bleeding off 3 or 4% of its economic energy each year. That means it's a $10 trillion inefficiency in the economy due to entropy and due to inflation. So that's a very clear problem to me. I believe we can solve that problem through the digital transformation of capital. I believe that every family, every corporation, every institution, every government would benefit from recapitalizing on digital capital that will make them live longer and happier.
Michael Saylor concludes his thoughts by reiterating his belief in the long-term potential of digital capital. He sees the current financial system as inefficient, with trillions of dollars of capital tied up in assets that are losing value due to factors like inflation and entropy. He believes that the digital transformation of capital, which Bitcoin is a part of, could address these inefficiencies and create a more sustainable and prosperous economic future. Please like and subscribe my channel.